Welcome back, everybody, to Fresh from the Trollbox, the BitMEX Trader podcast. Together with our CEO, Stephan Lutz, we had a very exciting week. We have an all-time high, actually two all-time highs, to be honest, of the Bitcoin price. And so there's lots to discuss. But before we start, Stephan, how are you and how was your week trading?
Exhausted, I have to say. Actually, I thought, like, beginning of yesterday, I can take a breath, everything is okay. And then we had the repetition of the events from earlier this week. So as you said, two all-time highs, two dips in the market. With everything around it, we've seen a lot of liquidations in the market on the way down in particular, but still quite strong resistances. So yeah, busy week, but nice trading in this environment.
Nice. Let's go straight into the charts.
Yeah, exactly. Let's look at some charts, some chart porn. What is interesting this week? Basically, the trades. Okay, you have all four in one. It's like Bitcoin and Doge. I mean, until the second all-time high yesterday, Doge was basically massively outperforming Bitcoin in a way.
Yeah.
In particular, in the beginning, just they've risen with their, let's call it beta in a way, and then didn't have that. I mean, you see it in the chart; it's still a strong dip, but percentage-wise, not that strong dip. I mean, all other things being equal, just looking at what I have here, Bitcoin is roughly 10% up in the last 7 days. Dogecoin is basically double, 20% up on a 7 days basis from now when we record it right now. So really a nice thing, seeing that. And then more interestingly for me is from the behavioral side of things, is ETH versus Solana, the two competitors on the level 1 there. Actually, ETH pretty stable upward trend with a dip, but basically going afterwards exactly into the same trend line. Very interesting, having seen roughly the 4,000 mark yesterday night. Good trading opportunities as well. Solana a little bit different here in terms of behavior. I mean, overall performance more or less the same, but unfolding in a different way, which I find very interesting. So again, it's about the opportunities. It's about what you can do. You see kind of predictable behavior, but unfolding slightly different for different coins, but it's stable in itself. Most interestingly for me, and I guess we come to that as we have done that previously, are the resistances. And we have seen the resistance around 70K is really, really strong. What we fear most, and we spoke about that yesterday already bilaterally, is below the 70. So the support lines are rather low. So the question is, what will happen? Will we see a major setback, another 10% down, or will we hover now for a long time around 70-ish, like 69, 70, but not going above it? And then last thing we will look at is funding rates again. Probably, I mean, a little word on funding rates combined with open interest, which is actually the metric that gives you whether we are risky or not. But maybe if you want to go through I don't know whether you have the resistances ready or...
Absolutely. Yes, we can look at the resistances for the Bitcoin price. In fact, those were the ones from last night. And what is really interesting to see here for those that are joining us for the first time, in this chart, which comes from our friends from Material Indicators, you can essentially see the different aggregated order books from various exchanges and where larger position sizes are positioned. So the brighter the light, the more and the larger positions are expected here. And so when we look at just what happened in the last 2-3 days, really here, we can see the Bitcoin price kind of going in and up between the 64, 65, 67 area for quite some time. And we can see that there is a very, very, very strong band of positions in the 69 to 70K area. So that was essentially the situation last night, when finally we saw a quick push through those order books, but it wasn't strong enough, right? So we saw, and this is obviously position sizes, so they could go either way, and we saw that people were positioned both for the up and for the down. That's why we saw that quick spike again. And what Stephan just mentioned, which is the second interesting part, is that big black void here, where really we don't see a lot of orders in the range between 66 till 62, really. So if we were to kind of not confirm the 69.70 area, very, very possible that we'll find ourselves very close to the lower 60s rather than somewhere in between here again. And so that is a current state of order books aggregated from various exchanges. The second thing that is interesting is over the last 2 weeks, who were the large kind of buyers and sellers. And when we look at the orange chart, very visible that small orders between $100 and $1,000 are down, very visibly. So basically, retail that is having small orders really going down, whereas on the other side, positions of 100K or more, or even a million and more, are on the rise. In fact, not visible on this chart, but last night there was a famous 10 million market order positioned on one of the exchanges. That is obviously a very strong sign of confidence into the market. 10 million market orders are very rare. And so we can see that order sizes are going up, meaning people have a very strong conviction. Again, not saying that they are all long or short, but people have a very strong conviction about major price movements coming. So this is what we see on the order books, and then moving to funding rates. Obviously, the flash crash after the first all-time high that we found on the late 5th of March was a bit of a flash in the order books and in the funding rate. So we can see that here, moving towards late February, early March, until the 5th of March, when we had the first all-time high reaching on BitMEX at least 69,400, and then very quick the downward to 59,000. Very, very strong market reaction on the all-time high led to a substantial correction in funding rates. We're looking at Bitcoin, it's relatively high for Bitcoin, 95% annualized. But then looking at some of the altcoins, especially Wild, especially Pepe, have been seeing extremely high funding rates. Again, showing that there is a very bullish sentiment of traders, as funding rates are essentially an expression of the imbalance between longs and shorts. And then after the first all-time high, we see the market kind of relaxes a little bit, funding rates go down. But again, we see a little bit of an uprise, especially on the altcoin side, especially on the meme coin side. That said, I think right now in the area we are, and then after last night, we're not in any dangerous territories from a funding rate perspective. So it's a relatively balanced market. And Stephan, I know you're obviously looking also at open interest and price findings. So do you want to comment?
Yeah, I mean, not usually, but in let's say heated markets or markets where you expect price movements, my additional metric is looking at open interest in conjunction with funding rates, especially for the main coins, where you have kind of a good valid market with good price discovery. So for example, for Bitcoin, if Bitcoin open interest rises and funding rates rise, that means that actually the derivatives market is not in lockstep with the spot market, either down or upwards. I mean, it depends on where the funding rate is it positive, negative. We've seen that here before the last, or let's say the first all-time high this week. We had huge funding rates positive, which means that the derivative side, the futures, were trading much above the spot price, which is also known as the basis. It opens up opportunity for arbitrage here and doing a basis trade and therefore getting some money out of it. But basically it means that many people had either big or strongly leveraged positions expecting a huge rise. And actually that was brought back in line with the spot market through this little crash that we've seen, right? So all the time when funding rates rise, and this is accompanied by rising open interest, basically, it means the likelihood for a major price action is pretty huge, right? And it depends on where you are. I mean, if you have strong convictions of Bitcoin going to 100,000 in the next 3 days, okay, you can disregard that. But from a market standpoint, if I see really steeply rising open interest and steeply rising positive funding rates, it means there is a likelihood that we will see a correction in the market, and the other way around in particular as well. So this is a little bit where I look at to determine whether I enter into a position or not. So I don't need to add to irrational exuberance all the time. Sometimes you can, if you want to take a bet or do a bet, that's fine. But professionally, I would be rather cautious and look for more delta neutral strategies. And they're a little bit of marketing. I mean, you guys have come up now recently and regularly with trading ideas that are more delta neutral, that take advantage of funding rate differences. I mean, for me, very recommendable to spread the word, so that even smaller traders and everyone who's interested in that to become a better trader actually gets the mechanics around this. So I really like the series that you guys have been come up and spread via social media recently. Exactly, the BitMEX Alpha.
Yeah, BitMEX Alpha, exactly. Can only invite our viewers to come and join the BitMEX blog, go into the BitMEX Alpha section, or find us on social media, of course. Very smart trading ideas, trading strategies involving funding rates, involving risk neutral or delta neutral strategies, etc. And I mean, looking at this, right, there is definitely very interesting base trade opportunities in the market. In fact, for any derivative trader, I think trading meme coins as a derivative is really an invitation for the base trade. So definitely an interesting read and obviously an interesting trade on BitMEX. Well,
read and trade. That's
read and trade. Exactly. So, Stefan, what are we expecting for next week? I mean, do we think we're hovering here in the above higher 60s and then maybe move on next week, or do we see anything on the macroeconomic side that gets you nervous? I mean, ECB meetings, Fed meetings, etc., or calm territory on the macro side?
Well, I think it will be, with hindsight, calm, but not so much on a day-to-day basis. I mean, if you look at that, we have now a pattern. I expect, in a way, looking at the resistance bands that you presented, that we will hover around those levels with a little bit of risk that we go down, that we have a correction. And as you said, it's quite a void there. It's not that there are many people saying, okay, I'm happy to go back into Bitcoin, let's say at 55 or so. So it's like, it depends on how far down we go. So I see a little risk, not the majority. I would say 65, 70% that we just stay where we are and we hover around. We have volatility around this because we will test the 70K, we will go down, we will test the 70K, we'll go down, because we still have inflow of the ETFs. But this is more normalizing. I mean, you see other people messaging around that of course the inflow of ETFs still is higher than what mine is on a daily basis, which is true. But then you have those resistance bands where probably people from like a couple of years ago are willing to get out of Bitcoin at the previous all-time highs just to cut their positions. You never know. So this is my expectation. On ETH, I don't expect anything new. I mean, the ETF for ETH is still a little way to go, but we will see maybe a little bit more of that catch up with Bitcoin. I mean, we had strong Bitcoin dominance. It's now slowly proliferating into main coins and then altcoins. You see that in the funding rates. Yep. And on the macro side, I don't expect really anything surprising. And we regularly, you trade on surprising news, right? I mean, not much change on interest rates. Still, we have election years, election year in the US. We will have election years, big elections in the European Union next year. So there is a potential for quantitative easing from my point of view, but not like in the next couple of weeks. I don't expect this, frankly. So it is maybe from the outcome or the results side a little bit more boring, but everyone needs to be cautious and position themselves in a way to actually be able to react quickly. We've seen that now twice this week. If you haven't been in front of the screen or your bots or your algos were set up in the correct way, you're previously, painful. Yeah, it was quite painful and have eaten up probably a lot of your P&L.
Yeah, I think you're right. What it really is a terrain to distinguish, right? It's a more technical terrain right now. That can be very profitable, but I think it's not for the faint-hearted. And as you say, it's one where we need to be careful, make sure that we watch the positions, make sure that we may use some neutral strategies that just benefit and profit from the good funding rates that are out there. And with that, I guess happy trading to everybody. And I wish you and everybody a nice weekend, and then see you next week.
Yes. Have a nice weekend and keep on trading.